The private credit industry and all of their problems in this crisis and their markdowns and their lawsuits and all of their redemption requests could affect your life insurance or your annuity. I'm going to tell you what it means. I'm going to tell you about the secret meetings that they've been having about it, and I'm going to tell you what you can do about it. If you have been following my podcast, I have been taking you on this journey talking about the private credit crisis and how insurance companies have been and can absorb the risk and illiquidity of the very messy private credit industry. Painted this whole entire picture, and then shortly after that, the Treasury decided we're going to have a series of meetings with insurance commissioners to talk about this problem. And guess what? Last week they had their first meeting, and this is what they talked about. 4 things: work on risk-based capital, private letter ratings, offshore reinsurance jurisdictions, and the oversight of evolving business models. We don't have a lot of time to go in off work, but I do want to talk about private letter ratings. This is a great opportunity to teach you about how at this level, things can just be a whole opacity party. That means you don't know what's going on. You know how you have a credit score, right? Guess what? Corporations, they have a credit rating. So we have a couple of companies that give out credit rating. Moody's, AAA, so on and so forth, kind of like a credit score. But guess what? Private credit, because it's not publicly traded amongst insurers and institutional investors, they have their own rating. And guess what? No one really knows what's going on. The only people that may know what the rating is and what's inside that justify the rating is the insurance company that's buying or selling the actual private credit asset that's coming from a private credit fund. They know what the rating is, but guess what? One of them has to pay the rater to make the rating. Isn't that a little bit of a conflict of interest? And so now, since the Treasury Department knows that these insurance companies are absorbing private credit risk, they want answers. I don't even know the tone of these meetings. It might not be they want answers. It might be, hey, how much can you absorb? Because we got to park this risk and this illiquidity somewhere, because these institutional investors, they are asking for redemption. They are doing lawsuits. Some of these assets are getting marked down. Somebody's got to hold these assets, and how much can you hold? Because guess what this is looking like? 2008, that was a big problem in 2008. Lack of transparency, opacity city. So how does this affect you? Some of the risk of these private credit funds, if the insurance companies can't absorb it, it could end up in your retirement. I talked about that on my last post. You can go back and look at that. Is it guaranteed? No. But this risk is going to be floating around in the economy. It's going to try to find a place to park, and we hope it doesn't park in your portfolio. So what can you do? In your investments, especially vehicles like funds or CIT assets, read the footnotes. I'm not saying that these products are bad, but you need to understand what you're investing in, and it matches with your comfortability level. And the next thing you can do, own infrastructure around boring, stressed systems instead of the assets themselves. For instance, property management. We already know real estate is stressed. This is the infrastructure around it. I've been telling you, property managers are going to be the ones that end up winning in this whole thing. Bookkeeping/CFO services. People going to have problems. It's going to get messy, and the people that service it always end up winning. What does this play into my narrative that I've been saying on the podcast? Picks and shovels. Service people that's having problems with all of this, especially the wealthy people, because guess what? They are stressing because they can't get their money out of Blue Owl. Y'all already know I'm going to do a deeper dive on my newsletter, because I'm going to give you more things that you can do to protect yourself. So comment newsletter down below.